Hi there, I'm Mike Staton, mortgage advisor at Staton Mortgage and Protection Specialists. It's Monday again, so I'm doing a Facebook Live video. And on this Facebook Live video, I'm going to be talking about early repayment charges on remortgages. I've had a lot of people make inquiries with me and my other advisors about remortgaging their property now, coming out of the fixed period, which they've got tied into with an early repayment charge, and seeing if it's actually worth paying the early repayment charge to come out of that mortgage and refix it again. Sometimes this may be the right thing to do, sometimes definitely not. The best example I've got, I had a client contact me about 2 weeks ago asking the situation they was in. They've got a year and a half left on their fixed rate. To come out of that fixed rate, it would cost them £6,000 in early repayment charges. They're still tied in there for 18 months. And the interest rate that they've got is 2.59%. And they were looking to refix it. Now, refixing it with the equity they had in would have only enabled them to do a 2.8%, but they wanted to fix it for 10 years. And there's a lot of things that you need to take into account. Personally, I didn't think that was the right thing for the client to do. And my advice was, don't basically do it. When customers come to me for a remortgage, it's not all about, or any type of mortgage, it's not about just making sure you get that deal through. It's not about making sure that you get that pen to paper and get the deal through under any circumstances. You've got to do what's right for the customer. And in a lot of circumstances that I've seen at the moment, with customers wanting to pay an early repayment charge to come out of their fixed periods just to secure a better rate because the interest rates are going up, I don't think it's right. Mortgage advice, it isn't all about what qualifications you got, what knowledge you got. It's about your opinion. And one mortgage advisor's opinion may differ from somebody else's. And what you've got to remember is, as a mortgage advisor, we're nothing but glorified salespeople. We're glorified salespeople that need a university level qualification to do the job in it, and that's it. And there are, in my opinion, some people out there that will just try and sell you a deal for the sake of selling you a deal, and it's not correct. It's not right. So when talking about remortgaging and fixing into a new product, you're going to have to look at several things. First of all, I've already mentioned an ERC, an early repayment charge. So what's the size of your early repayment charge? Is it going to be saving you more money than your early repayment charge actually is? Now, in the instance that I gave you, the person was paying £6,000 off when they've still got 18 months left on their current fixed deal. So they're not going to be impacted by any Bank of England base rate increases for the next 18 months. For me, it wasn't the right thing for them to do. The other thing is, I do believe that the media is making a lot more out of this. I mean, not too long ago, when me and Claire, we bought our first home, and we are only talking less than 10 years ago. We fixed for 5 years on ours on a 5.49% interest rate, and we fixed for 5 years because we didn't think it was ever going to get any lower than that, and lo and behold, it did. If anybody tells you they know what is going to happen to interest rates, they're lying. Economists don't know. They can guess. You just have to be lucky enough to be able to choose which economist you're going on. Before I did this video, I had a bit of a read up, and I looked at the Independent, the Financial Times, Telegraph, Mortgage Strategy, and different people are saying different things. One thing I read literally just before I came onto this video was an economist stated that within the next year and a half, he can see interest rates, the Bank of England, putting the interest rates back down again. So these people that are paying early repayment charges now to fix for long term, then in 2 years' time, when the interest rates drop back down, they're going to be in a position where, wow, we're paying way over the odds and we paid £6 for the privilege. But that's only if that scenario happens. Nobody can guarantee. And if I knew what was going to happen to Bank of England base rate, if I knew what was going to happen to any form of rate, so let me just turn my comments on. Feel free to comment, by the way. We got a striker yet, bro. We got two. We got Ireland and we've got Alvarez, mate. Nobody knows what the Bank of England base rate is going to do. So anyway, we're going to get back onto that now. So when you're looking at remortgaging, when you're looking at paying an early repayment charge, just to do that, it is the person that's doing it has to have your best interest at heart. Now, if you are refixing your mortgage, you need to look at several things, and it isn't all about what interest rates are currently doing. Yes, it's an important factor. Interest rates are important, but it shouldn't be the be all and end all of your mortgage journey decision. For instance, if you've got if you're in the I don't know, let's say you've got a child, you've got a newborn baby, they're going to start school at 5 years old. You're not going to go back to work for the next 5 years. Just the other partner's going to go back to the work, and you're going to stay off of work. Then there's no point in you fixing him for 2 years. But the 2-year interest rate might be better. But you're going to come across a mass array of problems in 2 years' time if you're looking to remortgage. So your fixed period that you set yourself into should be based on your own personal circumstances. And this is why mortgage advice is a bespoke thing. You're not going to get that on Go Compare the Market. You're not going to get that by walking into a bank, because a lot of the banks will initially tell you, we are not giving you advice. This is why I think a mortgage advisor, more than anything nowadays, is important, because they're FCA regulated and they are there to make sure that they act in your best interest. Corinne, loving our new house. Thanks so much for all your help and support. Again, my pleasure. I'm so glad we could get it done. So glad we could get it done for you. And I'm so glad that you're happy with your new house. Congratulations. And even better that we managed to get that, I think, less than 2 months. So well done. Congratulations, Corinne. I'm glad you're loving it. So yeah, when you're fixing your mortgage, you fix it to your own personal circumstances. I've heard a lot of people talking about these 10-year fixed mortgages now, and for me personally, a 10-year fixed mortgage is something that should be sold once in a blue moon. There is a lot of things that could happen to you and your life within the next 10 years. Your mortgage contract, in a way, is very similar to your mobile phone contract, and that is, if you want to get out of your mobile phone contract, you are going to pay a penalty to get out of that mobile phone contract. And the same works with your mortgage. If you fix yourself into your mortgage, you're going to pay to come out of your fixed rate. And normally, the amount you pay depends on the length of time that you fix into it. So let's just say, rule of thumb, a 2-year fix comes with a 2% penalty, 3-year fix, 3% penalty, 5-year fix, 5% penalty, 10-year fix, 10% penalty. I'm, again, dealing with a customer at the moment who is looking at selling their property. They have fixed their mortgage in for 10 years, and they did that 2 years ago. Now they've had massive personal life changes. Within those 2 years, 10-year fixed rate was not the right thing to do. When I said to that client, why did you fix it in? Oh, well, I didn't think interest rates would ever get any better. How do I get away with not paying my early repayment charge? You don't get away with not paying your early repayment charge. If you are unable to pick that mortgage up and port it over to your new property, the only way you avoid paying the early repayment charge is to not move and make sure you stick out the 10 years that you fixed into it. So the most important thing that I would say is, when choosing your fixed period, don't just look at the interest rate. Look at the look at the big picture, look at what's happening to your life. And as a rule of thumb, I always ask my clients, do you see any personal circumstance or life changes happening to you within the next 5 years? Any major life changes within the next 5 years? If the answer is no, then maybe a 5-year fixed is the right thing for you. If the answer is yes, then maybe you need to be reviewing whether or not you should be doing the 5-year fixed mortgage. What are the life changes? Are they going to impact your ability to obtain a mortgage? Are they going to impact you financially? A lot of the time you tend to find the answer is, I don't know. So my question to anybody who says, I don't know if I've got any life changes ahead of me within the next 5 years, it's, well, do you really want to sign yourself up to a 5-year fixed mortgage, not knowing what's going to happen next year or the year after in your own personal life? Remember, you've got that early repayment charge, 5% normally on a 5-year fixed mortgage. Let's just say, rule of thumb, you've got a £100,000 mortgage. That's £5,000 to get out of that. And for me, it's just, fix your mortgage based on your personal circumstance. Do not fix it because Bob at the pub or your mum and dad told you fix it for 5 years, because at the end of the day, the only person that you should take advice from is a financial advisor, a mortgage advisor. You shouldn't be, no disrespect to any parents, no disrespect to anybody who's ever bought a house before. I changed a light bulb last week, and I don't claim to be an electrician. Just because you've had a mortgage in the past, you are not a mortgage advisor. And only too often do I see some of those things. Oh, anybody recommend me a mortgage advisor? I always see those types of posts on Facebook, and I do get tagged into them quite a lot. And then you see the odd person saying, oh, XYZ Bank had a great rate when they did my mortgage 3 years ago. Things change. So if you're going to get financial advice and you're going to get the advice or you're going to get a mortgage, make sure you get mortgage advice from a qualified mortgage advisor. A good mortgage advisor will be able to give you advice from an extensive panel of lenders. And this goes back to my other previous videos. It's number one question you should be asking your mortgage advisor. How big is your panel of lenders? How many lenders have you actually got access to? As I've already said, I've worked for a business before where they only had access to 23 on their panel. I've got competitors in the area that have got access to 30, 40, 50, 60. My network that I've chosen, I've got access to over 100 lenders. So it puts me in a position where I feel comfortable to turn around to my clients and say, I do believe I will be able to get you one of the best mortgages on the market. Now, a lot of things have been spoke about within the financial service sector. Today has been absolutely phenomenal in the world, in the mortgage world as well. It was announced that the Bank of England are looking at scrapping their stress testing rates. Now, the way that stress testing is a way that they, when somebody's assessing you for a mortgage, the lender will assess it on a stressed interest rate, and normally 3% over the lender's standard variable rate. So let's just say the lender's standard variable rate is 4.5%. They will assess, the banks will assess it at 7.5% to make sure that if the interest rate increased by 3% over the standard variable rate, you can afford that. If you can't afford that stress tested rate, the lender won't, you won't meet their criteria. Now it's announced that the Bank of England are withdrawing that stress test, or are looking at withdrawing that stress tested rule. That may help a few people out in getting a mortgage, but the Bank of England only claimed that I think something as small as 6% of mortgages within the UK have been declined because of failure to meet stress testing. So what's that, 30,000 mortgages? So I don't think it's going to be a massive improvement. I do think that we will, though, see lenders change their affordability, especially with the cost of living increasing so much. Santander last week announced that they, or was it this week? I can't remember. It was last week or this week. Announced that they were changing their affordability calculators. They have now included the new cost of living, household costs, the new national insurance costs, etc. So if you have got an agreement in principle with a lender already but have not progressed to mortgage application, you need to make sure that their affordability calculators haven't changed, because if their affordability calculators have changed since you did your agreement in principle, it might not meet the affordability calculator for the full mortgage application. So make sure your mortgage advisor or your bank or yourself, if you're doing it yourself, is checking to make sure there's been no changes in financial input with the lender and their affordability calculators. Again, I personally don't, but you should not be doing this on your own. It's the biggest thing you'll ever buy in your life. Thinking that it is a simple, easy process and thinking that you will get a better rate than the hundreds of thousands of mortgage brokers out there. I think, in my opinion, is quite daft. But a lot of things happen in the mortgage industry at the moment. So I do believe that we're going to see an increase in what lenders will be willing to lend to you. I do think we will see further increases to the Bank of England base rate. Again, some economists have said that they expect them to go up to, the Bank of England rate to go up to at least 3%. Now it's currently at 1.25, so that's still 1.75% to go. It may not. Bank of England use the base rate to control inflation. Inflation, 9-10% they expect. Inflation is going up fast, but they're using the Bank of England base rate to try and pull down levels of inflation. The level of inflation, the perfect or the sweet spot is normally around about 3%. So my opinion, and it doesn't necessarily mean it's right, but my opinion is within a year and a half, I do honestly believe that they'll have brought inflation back down to 3%, and I do believe that we'll start to see interest rates come back down to what they've been. They've been pretty stable over the last 5 to 6 years. So I think we'll see them come back down. What we're seeing at the moment is the Bank of England trying to stop people from spending money, trying to encourage people to save in order to reduce inflation. And the best way to do that is by increasing interest rates. The most ironic thing about that is we're seeing increase after increase after increase of lenders putting up their standard variable rate, their mortgage interest rates, etc. But very few lenders have increased their savings interest rate from zero. So that to me is telling me that at this moment, the banks are using the panic spread by the media, telling people that we're in a recession, which at the end of the day only means that we've just had a bad economy for a couple of months, to try and sell as much interest rates as possible. They're throwing out these 10-year fixed. We're seeing them advertised everywhere. And I think, honestly, my opinion is they are preying on people's fear of the Bank of England base rate going back up to the 13s and 14%. If the Bank of England base rate goes up to 13 or 14%, I will tell you now, I will lose my house. I don't think it will go up any higher than 3%. I don't think these increases will last any longer than 2 years. So if you are looking at paying an early repayment charge to come out of your fixed period, I think you need to look at the big picture, and I think you need to make an educated decision. Sit down with somebody who can discuss this with you and actually work out, are you doing this because of what you're reading in the newspapers, or are you doing this because you've made an educated decision, your personal lifestyle is changing, and your new mortgage that you're paying the early repayment charge to obtain is going to fit in perfectly and in hand with your own personal lifestyle. So that is what I wanted to talk about tonight. I want to say thank you for everybody for viewing. I want to continue doing these Facebook Live videos on a Monday. We have an excellent week ready at Staton Mortgages. On Thursday, we are in the finals of the Family Business of the Year. The second year on the trot. We finished in the top 10 last year, which was absolutely fantastic. and that's as a national competition. I think that's absolutely amazing, especially being from Mansfield and being a Mansfield business, being able to put Mansfield on the map of mortgage writing is absolutely phenomenal. And let's hope that we can win the Family Business of the Year or make an improvement on last year's top 10 finish, which again I was so proud of. On Friday, we've got the very prestigious awards at the Mansfield and Ashfield 2020 of the Year, where Staton Mortgages are actually up for 3 separate awards. Again, I'm so excited about this. We was highly commended at last year's awards as New Business of the Year, and this year we are up for Customer Focus Initiative, something that I'm very proud of and I always bang on about. Being the highest rated mortgage brokerage in the Mansfield and Ashfield area with over 200 5-star reviews. We're the only mortgage brokerage in the area that's got over 200 5-star reviews. So that for me, again, that's great. We've got commitment to the community. If you follow Staton Mortgages, you'll know that we support a lot of local football teams, a lot of local youth teams. We support a lot of local charities. Myself, I'm from Clipston Village originally, and being part of these local community teams, they basically kept me off the street as I was younger, and shaped me into the man that I am today. So hopefully we'll do well at the Commitment in the Community award. And I'm up for a personal one. I'm up for Mansfield Entrepreneur of the Year, so, entrepreneurial spirit. Again, something that I'm very proud of, especially with us opening an estate agents last year with Danielle Rawlinson, who was doing an absolutely phenomenal job going out there with Staton and Cushley estate agents. And a big congratulations for Danielle as well, who last month made #1 on Rightmove for total viewings conducted by a local estate agent. So well done, Danielle. Absolutely phenomenal, especially within your first year of business as well. That is just absolutely amazing. But if any of you guys want me to talk about anything, there's a lot of things that we can talk about in the mortgage industry. Somebody's mentioned, can we talk about buy-to-lets? Someone's mentioned, can we talk about residential mortgages? Well, they are the 2 different types of mortgages that we do. So give me something more specific to talk about within a residential mortgage, within a buy-to-let mortgage. Give me a topic. If you're looking at buying a property in the future and you've got a question, we have set up a Facebook page. Again, I'll include the link on the comments below this. If you can't see the comment, feel free to inbox me, and I will send you the Facebook group page where we regularly update it with a little bit of mortgage hints and tips. But apart from that, have a great Monday evening. Thank you everybody for watching. It's been a pleasure doing this for you again, and I look forward to speaking to you all next Monday. Take care.